Hey, what's up guys? Welcome back to the channel. Today I'm diving into my Roth IRA portfolio, share with you guys my Roth IRA retirement account. So for those of you who don't know, the Roth IRA is basically a retirement account that you open yourself. It can grow tax-free and you can take that money out tax-free, but it's kind of like locked up in there until you're 60 years old, or they say 59 and a half. But you can put like $7,500 per year in it right now. And that money is money that you've already paid tax on. So that's why it's allowed to grow tax-free, but it is limited as to how much you can put in there. But you can actually take out the money that you put in also without paying penalties or taxes or anything like that. You just can't take out the money that has grown. So say you put $10,000 in and now your Roth IRA is worth $12,000. You can take the $10,000 out, and as long as you don't take the $2,000 that has grown, right? And you won't get taxed or penalized or nothing like that. So it's a good place to put some money, let it grow. And if you do need it, you can actually get it if you need it, as long as you're investing in vehicles that's going to grow and the portfolio can keep growing after you take your money out. But I wouldn't recommend doing that. This is supposed to be for your retirement. But anyway, let's dive into the phone, see the portfolio, see what's in there, and then I'll take you guys into the spreadsheet and show you guys how that's working out. So let's do that really quick here. 3, 2, 1. Bam. We'll open up Charles Schwab and we'll refresh it here. And so here we are. This is almost 9 o'clock in the morning here in China where I live. The market is closed, but the post market opens for like the next 10 minutes or so. So it might move a little bit, but we can see yesterday the Dow was down a little bit. NASDAQ was up 1.5%. S&P is up 0.75%. And so my portfolio is up only 0.5%. But right now we're sitting at $62,921, which is the all-time high in this portfolio. And I did put some money in here this month. I put like $500 here this month. And that's about $4,000 for the year so far, which I can only put $7,500 per year. So I will put that whole $7,500 here. I'm just a little bit at a time. I'm not in a rush, but you can see I do have $11,203 in cash because I did sell a position here. So I'll share that with you guys today too. If we go view all the positions, you can see I have SoundHound. This was just a speculative growth position. I got into this by actually selling selling put options, and I eventually got assigned. And actually the price went up and I took my initial investment out and then left the house money there. And I'm selling covered calls on this to get some income, but 144 shares of that. Next, I have SGov, 271 shares. This is where I'm storing some cash there. This is basically money that I actually deposited into this portfolio. So if I wanted to take this 27 out, I could take it out without any penalties. And I just keep it sitting there just because I know I can take it out without penalties. And I might use it for something, but I'm not sure yet. It's just sitting there in case I do need to use it for something. But the rest of this is all the growth that this portfolio has grown, anything above the 27,000. So you can see I've got SCHG, 357 shares, and I've got SCHB, which is 414 shares. Now, SCHG, as I mentioned in my other video, it's basically the NASDAQ, right? It's very similar to QQQ. It has similar growth and everything. It just lags slightly. I chose this one because my brokerage just let me buy fractional shares. So I can buy, get the same performance as the NASDAQ, but at a lower share price. So I don't have to wait till I have a lot of money to buy one share of QQQ. I can buy lots of shares of this and get pretty much the same performance. And then if we look at SCHB, this is basically the entire stock market, right? It's the broad stock market. It's just like saying, okay, the U.S. economy is going to do good. I'm going to buy the whole U.S. economy. It's pretty much what you're doing when you buy something like SCHB. And again, the performance of this one is very similar to Vanguard's VTI. Just again, we have the cheaper share price so you don't have to worry about trying to buy fractional shares if your brokerage don't allow it. And that's why I chose this. And also, these are Charles Schwab ETFs, and I'm investing in the Charles Schwab brokerage account. So I don't mind buying their product because I do believe, their product is good. It's easy to see that it's good. So I just buy their product, support them a little bit that way. So I don't really have any income in this portfolio anymore other than SGov, which does pay dividend every single month. And I do have a little bit of income from SoundHound's covered calls. But other than that, these aren't really income plays. They do have a dividend, but it's quarterly and it's nothing to really write home about. But this portfolio was all about growth for the future. So I do have a covered call position open there, by the way, too. So anyway, that's what's in the portfolio. Let me show you guys the performance of it, and I'll do this here. 3, 2, 1, bam. All right, if we open this up, we can see all the positions that I just shared with you guys on the left here. In the middle is the share price and the number of shares that I have. And if we go look at the performance, we can see here that SoundHound is not performing well, down 11.46%, total return 5.85. But you can look here, it's only 2% of the portfolio. And again, this is just a speculative growth position. So, I'm okay with 2% in that, not a big deal. Once this does hit positive total return, I might just forget about this though and just go all in on these two right here. We have the whole market, and then we have a huge portion of growth. So why not? Anyway, Roth IRA is meant to be simple. You don't need to do a bunch of crazy stock picking and all that stuff inside of a Roth IRA. This is a place where you just put your money and leave it alone and let it do its thing. And I like that simplicity. But anyway, SCHB, we're up 13.8% market and 14.85 total return. SCHG, we'll just call it 11% market return and 11.25 on the total return. And then SGov, this one pretty much stays flat all the time, but it does have that 4% annual yield. But it is slightly up 0.25%. And then the total return is almost 1%, and that's due to the dividend that it pays. So, yeah, that's all that's in the portfolio. And if we go look here at the dividend log, though, we can see this. And I had a lot of dividend plays before. I'll show you guys. See all these sold positions? These were all distributions from dividends and dividend ETFs that I sold. And I decided to go a different direction here. And I'm glad I did. But anyway, if you look now for April, I got $1.34 in options premium from SoundHound. SCHB and SHG didn't pay me anything. SGov paid me $79. And I did have a different position here, TSPY, which is Tab Alpha, is like a S&P 500 cover call ETF. And I sold it this month, but they did pay me $47.15 before I sold it. So I got $127 in income from this portfolio, but everything's the growth, right? It's all about the growth here. Everything I'm getting in this portfolio's upside for the future. I'm not really focused on dividend income right now, but as I get older and get closer to wanting to use this, then I can start moving that stuff from growth to income. And but I'm not in a rush to do that. If we check out the sold position, this is what I was telling you guys about, this TSPY. This is the one I just sold recently. You can see April 16th is when I sold it, 168 shares. There's my cost average. The sale price, you can see it was down, but it did receive some dividends, which made the total return. So I did actually exit in this for more money than I started with, but not much, 27 bucks, not a big deal, right? It's like 0.5%. So nothing special there. And these are some other plays like Rigetti. I had this and made some money on it. You can see 827 plus 230. I made like over $1,000 here. And this WPay, I sold this. When was this? Back in 2025. So that's why I was switching from income, trying to get into more growth. And I wanted to get rid of this dividend paying stocks that were not doing very well. But you can see this one had a negative total return. And this got me down to $145 on the total return on the ones that I sold, not on the whole portfolio. If we look at we can do that for you. Look at the whole portfolio. If we look at the total return column, my portfolio is up 15.69% on the total return. So 15% return on investment is pretty good. You know, the standard is 8 to 10 or 12%, something like that. So we're outperforming what the average is just by keeping it simple with SCHB and SCHG pretty much, because this right here is dragging the portfolio down actually. So if we didn't have this, we'd be doing even better. This is down 5%. So, you know, we have that problem that we might solve very soon. So, yeah, anyways, just thought I'd share that with you guys so that you guys see how this is performing. And love to hear your thoughts and comments down below. And look forward to seeing you guys on the next video. Y'all take care, man.